Cap index, which is again making a move back towards the low point of the day. So that really is again the bigger risk that recoveries will be sold into. Sashi Krishnan, CIO of Birla Sun Life Insurance, is with us in our studios. Sashi, good morning. The only reason the market has only fallen 15% despite the kind of FI outflows that we have seen is the kind of inflows from DIIs. At your end, do you think the flows are continuing and will continue to see more domestic inflows, or are we now at the risk of seeing any kind of redemptions?
No, I don't think we are at the risk of seeing any redemptions. In fact, I mean, most retail investors do tend to believe that, index levels of 7,500 to 7,700 are actually levels where you should buy into equity.
Okay.
And, the domestic mutual funds have got something like 11 billion this year, though, the overseas investors are now, their net inflows into India are just close to around, I think, 2.8, 2.9 billion. So that's more or less got compensated. I think there's a great opportunity, and we are actually, in my opinion, poised for incipient economic recovery in this country. And if you invest into this, you will make money in equity.
Okay. Mr. Krishnan, what are your thoughts in terms of the uncertainty that we are seeing maybe on the GST now because of the disruption that we are seeing in the Parliament in the past couple of days? Do you think that's weighing on the market, the fact that the GST might not go through as expected?
Yes, I think that's one of the immediate factors that's weighing on the market because, legislative action obviously is being held up. But I think, from a broader perspective, you must, realize that structural reforms are happening in this country. And if you look at, for example, even GST, the recent report that was put out by the economic advisor seems to have brought consensus in terms of what should be the revenue neutral rate, how should the sharing happen. I think, therefore, from a structural reform perspective, I see a lot of stuff happening. Legislative, action is being held up, and I presume that it's in course of time that will get sorted out. So markets, yes, are worried about it, but I don't think the markets, are going to get worried about the fact that from a long-term perspective, the story still remains good.
Okay, Sashi, market has the habit of factoring in the recovery at least 2 to 3 quarters in advance.
Correct.
So by what quarter do you think we should see recovery, and which stocks or which sectors are you most bullish on to play this economic recovery?
Yeah, so I think two key things that I observe at this point of time. One is that, you're seeing definite signs of the investment cycle reviving. And if you look at gross fixed capital formation, you've got some big jump in that number. Right? It's almost 6.8% from 2.5%. And I think two reasons for that. Reason number one is that a lot of the stalled investments have started getting back into action. And two, you are seeing a lot of money waiting in the sidelines, both domestic capital and foreign capital, to get back into this investment cycle. And with money being there, and the fact that execution is picking up, the ease of doing business is picking up, I think it's only a matter of time before money gets in there. And therefore, one of the key themes that we will play is this economic recovery and the revival of the investment cycle. And if you look at that specifically, there are 2-3 sectors which we will play out here. One is the BFSI sector, especially the corporate banks, the banks that lend to corporates, because they've been beaten down, and I think reasons are but obvious. You've got 12% of stressed assets in the book. But you must realize that all the people who've got, a stake in this, that is the banks, the Reserve Bank of India, the government, I think they're all now on the same, plane, and they're all saying that we will do whatever it takes to sort this issue out, both in terms of improving the stressed asset situation and improving solvency for these banks. And therefore, I think, as the economic cycle recovers, these guys will give you, the largest delta. Coupled with this, obviously, is the capital goods sector and the cement sector, because there we're seeing a lot of action on the ground. I mean, we're not seeing private capital yet coming into infrastructure, but you've seen a lot of government capital coming into infrastructure. For example, the highways and the railways are putting in a lot of money. And that, I think, is the next sector that will sort of play out the early, incipient recovery that we will see in the, economic cycle. Okay. And thirdly, I think the space we will look at is the oil and gas space, because of two things. One is that you're seeing both refining and petchem margins improving, and the fact that lower oil prices and fuel reforms is leading to better margins for the marketing guys. So I think this is something that we would like to play. We continue to play. We overweight over there.
Okay. Mr. Krishnan, about the economic recovery, a part of it, which would be the commodities play, the metals index, would be linked largely to what's happening globally. For example, we've already lost over 37% year to date on the metals index itself. So do you assume that maybe next year we would see a recovery in the metals, in the commodity plays, and hence banks would be better placed in terms of asset quality?
That's one thing that will, I think, definitely happen. I think the commodity cycle seems to have bottomed out with oil at 40 and most of the other metals dropping to where they are today. My own feel is that it's bottomed out, and I think the important thing is that we always want an expect or build in an earnings revival if we want to give better valuations to this market. And I think you're going to see with the commodity cycle bottoming out and economic recovery coming in. My own feel is that earnings will recover from their current sub 10% to earnings growth will recover from sub 10% to close to around 14-15%. And a lot of it will have to is contingent on the commodity cycle also sort of bottoming out rather than it falling further from here. I would sort of bet into that. But yes, there are problems out there, in as much as yes, you have a China issue. China isn't growing as fast as it would go. But for India, I think, with money available for investment and commodities being where they are, I mean, it's, I think, one of the best sort of combinations for the economic cycle to take off.
All right, Sashi, thanks a lot for dropping by and talking to us. So that's the long-term market call. From Sashi Krishnan's point of view, the market could be at the cusp of a big recovery if the economic recovery